What's going on, guys? Welcome back. I hope you guys are well. So, another really bloody day in the market. Today was actually really ugly. So, and then now it's getting a bit dicey. Okay, now it's getting a bit of a concern because it's getting it's getting clear, right? Whether or not this was the top, whether or not January was our actual top here in the market. And so there's a chart that I want to review with you guys after we take a look at this buy, which is getting close, guys. It's getting very damn near close to invalidating the entire wave structure that was out from COVID lows. Okay, so before we dive into that analysis, guys, do me a favor, subscribe to the channel, give this video a thumbs up, and don't forget to hit that bell icon. Okay, you don't want to miss these videos because it's important what we're going to review today. So let's take a quick look at the SPY in our bullish count. Okay, this bullish count is suggesting that we have already completed the wave 4. Now we are we're a hairline away from invalidating this count. Okay, at which point I think we already did, right? Post market, I think the SPY is already below these zones. Let me take a look here. So the SPY is below, yeah, 420.59, 420.59, and our invalidation level was January the 24th, 420. Okay, so this count has been invalidated, but let's review it anyway for the sake of just looking at it at the moment. So let me take you down to the 1 hour time frame. Okay, so this wave structure was suggesting that our wave 3 in the primary degree topped on November the 22nd. Okay, we then since made a W, 3 waves up in X. Okay, we then started with this trend line resistance that we sold off here on January the 10th. We confirmed it on January the 12th, the trend line. Okay, it was acting as resistance, so this line became a very critical one. We then sold off in the Y wave to then say we completed the wave 4. We then rallied in 5 waves up, right? 1, 2, 3, 4, final fifth that truncated into the wave 1. We just gapped up ever so slightly above the trend line, but then we sold off. The A, B, resistance, and now sold off in C. Yesterday, as we were doing the video, guys, and as I was showing you, we were bouncing off the 100% extension at 420.66, thus leading me to believe that maybe, just maybe, guys, the wave 2 was completed. But then this morning we gapped up and then we just faded lower. All right, so given the fact that this move or this structure is invalidated, let's hide it. All right, and let's turn on this wave structure here. So I want to take you up to the daily time frame, and I want to take you towards actually the weekly time frame. And it's important to take a look at one thing, right? So this entire bull cycle, right, from the credit crisis low of March 2009, okay, we've have 1, 2, 3, 4, and 5. Now the question is the fifth wave completed? Did the fifth wave completed here on December or early January? Okay, and that's a question that a lot of us are asking ourselves. And given the fact of everything, the geopolitical tensions that are happening, everything with the Fed, it is. I mean, I don't want to say it, but maybe it's likely. Okay, the chart that I'm going to review with you guys after the SPY will let us know. So 1, 2, 3, 4, 5. So in this count, well, guys, we're still looking for a little bit further upside. Okay, and let's take a look at the daily time frame to review this structure. Okay, from the COVID lows, okay, when we completed our fourth wave in the cycle degree, all right, we did 1, 2, 1, 2, 3, 4, 5 to the third. Okay, completed the primary degree wave 3. Now we're looking for the fourth wave completion. Okay, we're looking for the A, B, and C, or the W, X, and Y. Likely is the WXY because we have 3 waves within it. So W, X, and Y. So the Y wave, it's likely if and when we continue on lower to complete anywhere between the 412 to the 393 on the SPY. Okay, so the SPY, it is likely that we see these levels. Now let's take a look at the 1 hour time frame and let's review this wave structure. Okay, again, this is a story that we're telling here. Okay, guys, so it's important for us to understand. If you guys have any questions at all, just leave your comments down below. I'll be happy to come and answer. Otherwise, just join Trending Waves. We will be happy to answer your questions. Oh man, sorry, it's been a long day. So anyway, so A, B, C to the W, 3 waves up to the X. Again, trendline resistance. Now we have the 1, 2, 3. Okay, we're gonna break below January 24th low. We bounce in 4, okay, and then we continue in 5 of A beyond the 1618, okay. At which point we're going to see this, right? We see this 5-wave progression. We then see a 3-wave pullback. This zone will serve for a lot of people, either the bulls or bears, to take a position, right? Because they're going to anticipate a break above this trend line that has been resistance for a couple of weeks now, all right? So B waves, if you guys know or familiar with Elliott wave analysis, B waves are designed to fool the trader, whether it's a bull or a bear, all right? They're phonies. They are designed for that reason. They're designed to trap you guys. So if we see, this is a tell, if we see an impulsive structure of 5 waves out, okay, then a back test of this trend line. Let me do this again. This is the hope that we should have, right? Or I shouldn't say hope, but this is what we should be looking for. For some reason, if this is the bottom tomorrow and then a few days after, we should be able to see a wave and a break of this trend line, a back test, and then we go. Okay, that would be the tell that maybe this was the bottom, a double bottom here. Otherwise, we see a 3 waves up, rejection, and then we head on lower into 5 waves. At which point there'll be massive selling, a massive panicking, and then a lot of people will get crushed. All right, market finds support, and then off we go. So if we need to be looking out for this trend line for resistance, and then we're going to be looking out for these two zones, all right, 412 and 393 on the SPY. Okay, guys, confirmation is just hairline away. All right, so the chart here is obviously the Qs. The Qs, I'm going to show you guys. Let's take a look. Well, so look, right, the truncated fifth is already invalidated. Okay, it's already invalidated. We broke it. No reason to keep on watching this one. So let's turn on our bearish count, and let's go towards the weekly time frame, and let's take a look at our excuse me there, at our cycle degrees. All right, so we have the 1, just like in the SPY, 1, 2, 3, 4, and 5. We're still looking for further upside, right? Should the level that I'm going to show you hold, we're still looking for this upside here. Okay, so anything between 489 and 620 will be a good level to watch for the final 5th wave in the SPY. All right, so let's go down towards the daily time frame, and let's review from the COVID lows. So the daily time frame, here it is. Post COVID, okay, we have our wave 1, 2, 3, and here is where I'm looking at, guys. This is where it becomes very, very, very important. Per Elliott wave guidelines, wave 4, this wave 4 cannot go beyond the territory of wave 1. All right, I'm going to repeat this again. Wave 4 cannot go beyond and close beyond the territory of wave 1. That's a violation. All right, and thus given an invalidation to this entire wave structure. All right, so what does that mean? So here we are, right? How much longer do we have till we hit this low? So let's take a quick look, right? We're gonna set this line here at 304.26, which was the high on the wave 1 back here on September the 2nd of 2020. That represents about 24-25% downside, okay, in tech or in the Qs. All right, let me do this again because I just undid this for no reason at all. All right, so that represents about a 25%. We have now gone roughly from the top, from the high, roughly 18.5 or 19%, guys. All right, that means that we have about 7 to 8% left in the Qs before we invalidate a bull cycle, sorry, a bullish count that will take us higher, and confirming, or will be the first sign, the first confirming sign that the top was here already in the cycle degree of December, right? So what does that mean in the weekly time frame? What does that mean for the longer term? So what would that mean? That would mean that the entire bull cycle from credit crisis to 2021, right, over a 20-year cycle has completed. Wave 5 is officially here, and we are in the midst of a 1, 2, 3, 4, 5. So likely we are going to head on lower in a super cycle degree. Okay, So the super cycle degree, that means that I'm going to drag these out. In the next few years, right, we are in a bearish market. All right, so cycle degree wave 1 completed. All right, so we already know that fib retracements are taken from the low to the high of that wave cycle, and a wave 2 will likely go towards the 2338.2 of that super cycle, right? Where is this going to be? Somewhere between 211 to 140. All right, between 211 and 140. Guys, this is important. All right, the Qs may be the tell to let us know that we are officially in a multi-year bearish market. This will drag out for however long it needs to. Okay, wave 2 is normally directional, so I'm hoping this will be an ABC. I don't know where this will be though, guys. All right, but it is not going to be pretty. All right, guys, it is not going to be pretty. This will likely take us to the start of the pre-COVID or post-COVID, at the point where we're breaking out, or beyond the COVID line. All right, the start of COVID. Excuse me. So I don't want to spook anybody out, but that's something that we as traders and as investors need to look out for. So down to the 1 hour time frame, and let's take a look at the line that must hold. All right, the line that must hold is here, 304. All right, so we are close. So we have, is it 304? Yeah, it's 304, right? Let me go back up to the daily. Yeah, 304 right here. So down to the 1 hour. All right, so we are at the, so put it this way, right? The 618 is our line in the sand. The 100, 305, 308 is the line that we must hold, guys. All right, so we already completed the W, the X at the 50% retracement. 1, 2, 3, 4, A, go back up in B. All right, and then we either have to truncate in C, or we have to make a very quick 5 waves down in the wave C of Y of 4. So 618, 308, and 305, a must hold line. Okay, must hold. Otherwise, prepare yourselves, brace yourselves for a bearish market. Okay, guys. So hope that didn't spook anybody out. Just all we can do as traders and investors is just prepare, hedge our positions. But once this comes down, if it does, we will see a bounce, of course, but it's at that point where we will need to start reevaluating our positions and start looking for bearish positions to the downside. Okay, guys. So thank you so much for tuning in. Thanks so much for tuning into this horror movie. But yeah, hopefully I see you guys over on the Discord group, and I'll talk to you soon. Take care.